Hello, hello, hello. Welcome now, Stock Trades. Mic check 1, 2, 3. How's everyone doing today? This is one of our most famous videos. This is what we're known for. It's calculating the intrinsic value. By far, this is going to be the best intrinsic value calculation that exists amongst all of Wall Street, and I can guarantee you, and you're going to go ahead and see it. This is the calculation that was able to predict SoFi at an overvalued state at 20 and an undervalued at 4. So without further ado, what we're going to do is we're going to type in the intrinsic value here. But to do that, we need to calculate the growth rate. Now, given that they're still, if you look at their financials real quickly here, in terms of their net income, they're still net income negative. So we're going to go ahead and look at the revenue growth, but not specifically the past revenue growth. We're going to look at the future revenue growth. And how to do that is we utilize our proprietary intrinsic value calculation along with our annual estimate brain machine stock terminal, which then if you go ahead and look at it, we calculate that the high value for 2023 annual estimates is $2 billion approximately. Then we go to 2025, and yes, we have these numbers. We're going to go ahead and look at the annual revenue high of $3.3 billion. Then we're going to do a compounded annual growth rate calculation where we get 26.45. I'm rounding up. That's what we expect for SoFi to grow, right? Which is in line with how it's growing now. Then we're going to type it in utilizing this information into our intrinsic value. And enough talk. Let's go ahead and let's get to it. So like I said, the compound rate is 26.45. Okay. So we're going to put here 26.45. Then currently on the TTM, we're looking at 1964. We're going to do two different types of calculations. We're going to do a revenue estimate of free cash flow at 5%. Why 5%? Go look at all your positive free cash flow companies that are just normal free cash flow positive, not in terms of SaaS-like structure, which is what SoFi is trying to scratch into. You take 5% of the revenue, you get historically that as free cash flow. Look at a lot of the other banks, and you'll basically see that type of ratio. We go in and put 0.05, and we multiply our trailing 12 months, and we get 98.2. We put 98.2 here, and then now check this out. We're going to go 10 years into the future, right? So you're going to see the numbers here from 2022 to 2032. Again, it's that, I need to change the dates here, but the equation stays the same. We're going 10 years into the future, and then we're going to discount back at today's present value. A lot of people are saying, well, this is supposed to be, the stock price is supposed to get there in 10 years. No. This is discounting back at today's present value. Educate yourself before you make a comment like that. So then you're going to go ahead and divide by the number of outstanding shares, in which we have here, we bring in here, is 951 million shares. So we put 951 because, of course, these numbers are in millions. And would you look at that? We get a bull case of $7.74, a base case of $5.32, a bear case of $3.91, and a recession of $1.95. Now, guess what? What's the stock trading at right now? $7.56, literally right smack dab at our bull case. Now, again, this is a bull case of 5%. I'm going to show you right now why we think that we could go higher on the revenue estimates. But now you know why I was very comfortable when the stock was trading around $4 to $5. I was like, this thing is going to explode. This is undervalued. And if you don't believe me, go check back in my videos and you'll see us doing the intrinsic value calculation. I was in a hotel room at the time. Okay. So what we're going to do now is then all we got to do is just raise this to 10%. Why am I okay raising it 10%? Well, if we go ahead and look at the margins, ladies and gentlemen, they went from gross margin percent of 67% to 81%. Their gross margins is amazing. Okay. They don't have the typical overhead that a standard brick and mortar bank has. So we can honestly do a 20% margin, but we're going to be a little conservative and do 10%, right? Because we're going to say the other 10. So first off, what's gross margin? Every dollar they make, 81% comes in to them as profit, right? Which is why they were able to invest heavily in other businesses, hence why there's negative free cash flow. They're just investing and trying to grow as much as they can. So when we do this and we do 10%, we get a free cash flow estimation of 196.4 million. We put 196.4, this is what we get. A bull case of $15.47, a base case of $10.65, a bear case of $6.82, and a recession of $3.89. Currently, SoFi is trading at its bear case, and it went all the way up near its base case. But again, a lot of folks that are smart out there, you guys know, we're looking at SoFi to $15 to $16. You guys already know that, right? I follow some of you guys that have been talking on Twitter and whatnot. You guys understand that, hey, this has the potential of going to $15 in the matter this year or next year. We don't know, but definitely within 2 to 3 years, we should see 1547. Easy, right? Now, in terms of the long-term price target for the 10-year approach, that's when we did a price to sales analysis, which a lot of folks were saying, hey, that's too high. Well, if you go ahead and do the proper due diligence and actually fact-check everything we say, you can see how actually quite conservative it is. But again, the other analysis we did was a 10-year perspective. This is a free cash flow perspective, okay? And we use forward annual estimates to go ahead and calculate the specific revenue, and we got 26.4 something, okay? So we believe that SoFi is undervalued. Easy price target of $12, anywhere between 10 to 12, easy. And we're going to go ahead and continue to keep following it up. If you like this analysis, if you like what we do, smash that like button, hit the subscribe. We are an independent equity research firm that likes to democratize financial information to the retail investor community space. By the way, our podcast is blowing up. We have literally over 490 reviews on our podcast. It is going insane. People are really starting to notice. I think honestly, we've been shadow banned on YouTube. People have been basically noticing our due diligence, our research. And again, ladies and gentlemen, hard work works. Really working really hard is what successful people do. Okay. Now, go ahead and check out our books. All profit proceeds will be donated to our charity, the Global Neurosurgical Alliance, which you can go ahead and take a look at, and our affiliates. These are the type of students we help. Again, we always like to do good. You go to our business Twitter, you go to our affiliates, you see my medical Twitter. Again, I'm in the medical field. I'm an aspiring brain surgeon. Then you can go ahead and go to the Global Neurosurgical Alliance. These are the type of students who we help. In fact, one of them just basically got an abstract accepted, one of our papers, and she's going to be presenting this lady here. First generation in her family and everything. So we're doing God's work, not only in the financial side, but also in the research side. Check out our books. Also, if you haven't done so, take a look at our coupon code New Year's, $800 off, link down below. And 3D Machines, I appreciate your energy. God bless each and every one of you. Have a wonderful, good night.